Ladies and gentlemen, good day and welcome to Granules India Limited Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on their touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Raheen from Orient Capital. Thank you and over to you, sir.
Thank you, Steve. On behalf of Granules India Limited, I extend a very warm welcome to all participants on Q4 and FY24 financial result discussion call. Today on the call, we have Dr. Krishna Prasad, sir, Chairman and Managing Director, Dr. KVS Rama, sir, Joint Managing Director and Chief Executive Officer, Ms. Priyanka Chigurupati, ma'am, Executive Director, Mr. Mukesh Surana, sir, Chief Financial Officer. Before we begin the call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinion, expectation as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Krishna, sir. Over to you, sir. Thank you.
Thank you, Irfan. A very good evening to all of you, ladies and gentlemen. And thank you very much for attending our Q4 earnings call today. A detailed presentation of our Q4 and full year FY24 performance has been uploaded to our website, and I'm sure all of you would have gone through it by now. We had a strong performance in Q4 with continued growth in the formulation share of the business. This was driven by new products manufactured in India and mainly in the US, and also sales in new geographies. While the year wasn't as per our expectations due to several reasons, including the cyber attack and changing marketing dynamics for some of our products, mainly paracetamol, we are very excited to see our strategic initiatives take shape. Our FD segment had grown by 41% in Q4 FY24 compared to Q4 FY23 and contributed 65% of our revenue in FY24. The sales of new products other than our legacy 5 products have been growing well and now contribute 25% of our revenue versus 15% 1 year ago. We continue to prioritize investment in building R&D capabilities and improve the quality of our product pipeline. We have exciting product pipeline in oncology, anti-diabetic segment, large volume molecules, and select non-OSD forms. Dr. Ramrao will elaborate on this further in his speech. We have made good progress on products being developed on innovation and technology platforms such as biocatalysis and continuous manufacturing. The pilot plant validation for 2 API products has now been completed, and we are gearing to build commercial scale manufacturing capacity at Unit 5 in Vizag. We have approved ANDAs for the finished products, finished dosage forms of these APIs, and with this backward integration enabled by the differentiated technology platforms, we are aiming to reach the leadership position in these molecules. We expect the formulation segment to drive the growth going forward with API and select KSMs supporting this growth. We are gearing our FD capacity to cater to this incremental demand. The construction and capacity ramp-up of the new formulation facility at Genome Valley as part of Granules Life Sciences is progressing well. This plant will add 8 billion dosages to our finished dosage capacity. The plant successfully commenced operations in the month of March, and the capacity is being ramped up progressively. On the sustainability front, we have committed to achieving net zero by 2050, aligned to SBTi's 1.5 degree pathway. We have conducted one of the most comprehensive assessments of our Scope 3 emissions in the pharma industry. Our net zero roadmap has been finalized and action plans have been initiated on efficiency measures, adoption of biofuels, renewable energy, sustainable supplier sustainability programs, and green molecules platform. At C0, our Green Pharma initiative, we are focused on strengthening our core business for backward integration of paracetamol and metformin in a sustainable manner. We commenced operations for DCDA at the newly built pilot plant in Vizag during March 24. The pilot DCDA plant has a capacity of 108 tons per annum. Plans are being worked out for a larger commercial facility at Kakinada. To summarize, we are excited about the various venues for growth, including advancing our core products up the value chain, introducing differentiated new product lines, and expanding and deepening our presence into new geographical markets. With this, I hand over the call to Dr. Ramrao.
Thank you, Chairman, and good evening, everyone. We have been communicating for some time about our strategy and transformation journey at Granules. After several quarters of focus and hard work, I'm happy to share that our strategies, strengthening the core, focus on R&D, technology, and innovation, and strong focus on quality have been paying off well in the markets, or in other words, we have strategy in action. Following are examples of translation of our strategic thinking and execution into tangible business results. On first strategy of strengthening the core, we have looked at this strategy for two components of our portfolio, regular commercial products and new product launches. Our approach is through commercial excellence, innovation in R&D and technology, and manufacturing excellence. For commercial products, our program is focused on market share expansion in the chosen geography, resulting in moving up the value chain from API to finished dosages. Expansion of business in geographies outside the US, a sustainable and a healthy bottom line. Following are the key results in this strategy and action. The finished dosage business is now contributing 65% of the revenue, while our API and PFI businesses are around 35% in FY24. Comparatively, in FY23, the finished dosage business stood at 50% of the revenue. This is a significant shift in our business model, driven by strong focus on North America, Europe, and chosen geographies of rest of the world. This is an outcome of our strategy of strengthening the core. Another important guiding principle is the revenue and the market share growth of our core molecules in North America. We have grown more than 20% in the last couple of very tough generic competition in this geography. This growth is led by products where we have achieved and have continued to remain between the two top players over several years. We continue to maintain this dominant position in these molecules. Our finished dose business revenue has also gone up significantly in Europe and some of the chosen regulated markets. The revenue has gone up from 248 crores in FY23 to 327 crores in FY24, an increase of 32%. The approach of strengthening the core, which has also made us build a packaging facility, GPAC in US, has grown our OTC business by around 25% in FY24. This move has made us one of the key players in the private label OTC space and the only integrated player right from raw materials to distribution. New product launches, we have received 16 dossier approvals from various regions in FY24 on account of the excellent work from our R&D and regulatory teams. Several of these molecules have been launched in US. We continue to gain momentum on products we launched in Q3 and Q4 of FY24, primarily in the US. Majority of these molecules have been filed in Europe and some of the chosen ROW markets. We have already received some approvals from Europe and expect most of the approvals in Europe and other geographies in the next couple of quarters. Some of these molecules will become a part of the existing core molecules, and our approach of strengthening the core will enable these molecules to become market leaders in all chosen geographies. We are not only strengthening the core, but we are also expanding the core. Through these achievements of strategy in action, I wish to state that our first pillar of strategy has been successfully executed, and the results are clearly visible through market share increase, revenue growth and geography expansion along with healthy and sustainable bottom line. Coupling this with our backward integration strategy and green chemistry, we wish to build a robust and an expansive core for the organization. The second strategy on R&D, technology and innovation. Through our efforts in portfolio management, R&D and continued innovation in new molecules, we have successfully created 4 major platforms for the organization. The first platform, CNS, specifically ADHD, is a growing therapeutic category in US and in other parts of the world. Our R&D infrastructure at our Chantilly facility in Virginia, US, is focused on development and manufacturing of CNS medication with special focus on ADHD products. Our strict policies and management around manufacturing and commercialization of these products have allowed us to gain momentum in the US. Our R&D in Chantilly also focuses on complex products, some of which have been launched at a brand level for several years without competition owing to the complexity in development. The composition of this portfolio includes Parafor, Parafor 181, First-to-5 and Para3 products. With this well-balanced portfolio of immediate launches and IP-driven litigation launches in the next couple of years, we see a lot of excitement in this category. Oncology platforms. Leveraging our excellent infrastructure in API and formulation of oncology at unit, we started developing our oncology portfolio of first-to-5, first-to-launch, Para3 and Parafor and Parafor 181 products in the US and Europe. This portfolio will also extend to the rest of the world, including India. These products will be developed for the global markets and we expect to launch them from FY26 onwards. A lot of commercial work in this direction has already begun and we expect to play a very significant role in the oral solid oncology business across the globe in the coming years. Enzyme and manufacturing technology platform. We have been communicating for the last 4 quarters on our progress on this platform. 5 projects are significantly advanced and almost at the stage of completion of optimization. One of the projects has been tried at the plant scale successfully. We are focused on creating manufacturing technology infrastructure and start validation of at least 3 molecules in Q3 FY25. This platform is expected to bring us global cost leadership, manufacturing technology excellence, and help us lead towards our journey on sustainability. The progress of this platform in a short period of 4 quarters demonstrates our commitment towards transforming the organization through science and technology. As is clear from the above, Granules is fully focused on building world-class product platforms through science and technology and drive business growth through bottom-line sustainability and living the purpose and vision of the organization. To achieve this transformation, spend in R&D has also been increased to around 4.5% of the sales. Strong focus on quality. I wish to share our happiness with all of you on the 0483 outcome of our Unit 5 facility of USFDA in April this year. Quality everywhere is a value of the organization and we wish to percolate the quality culture across all layers of the organization. Several initiatives focused on behavior, technology, systems and processes to drive excellence in quality. We will continue to have strategic focus on quality and will make this a formidable strength for Granules. Thank you and over to you, Mukesh.
Thank you, CMD and GMD. Let me take you all through the top financial parameters now. Revenue. The fourth quarter revenue were 11,758 million as compared to 11,955 million in Q4 FY23 with a decline of 2%. Formulation growth including GPA manufactured products offset by decline in para-API sales volume and price erosion. Revenue grew by 2% as compared to Q3 FY24 in line with our strategic focus, continued FD sales growth including GPA manufactured products offset by decline in para-API sales volume and price erosion. The full year FY24 revenue were rupees 45,064 million as compared to rupees 45,119 million in FY23. Despite a cyber incident and decline in para-API volume and price erosion, transformative focus into formulations including GPA manufactured products enabled the company to sustain the similar turnover year on year. The sales breakup as per business divisions, geographic regions are presented in our investor presentation, which is available on the website. Value added. Our value added as a percentage of sales for Q4 FY24 was 60.1% as compared to 47.8% in Q4 FY23. Value added as compared to Q4 FY23 is up by 12.2% points, primarily on account of higher FD sales, including GPI manufactured products and lower material cost. Value added as a percentage of sales for Q4 FY24 is up by 3.1% points from Q3 FY24, primarily on account of higher FD sales. Our value added as a percentage of sales for FY24 was 55.1% as compared to 48.9% in FY23. Value added as compared to FY23 is up by 6.3% points, primarily on account of higher FD sales, including GPI manufactured products and lower material cost. EBITDA and EBITDA margin. EBITDA for the quarter was 2,557 million, that is 21.7% of sales, as compared to 2,281 million, that is 19.1% of sales in Q4 FY23, an increase of 12% in value terms over the previous year, mainly on account of improved VA percentage. EBITDA for the year was rupees 8,560 million as compared to rupees 9,138 million in FY23, a decline of 6% over the previous year, mainly on account of increase in R&D spend for R&D pipelines. R&D. Our R&D spend for the quarter was rupees 609 million as compared to rupees 369 million in Q4 FY23 and rupees 468 million in Q3 FY24. R&D spend for the year was 1,986 million. We are going to continue to spend on R&D in the coming quarters as well. Freight costs. Freight expenses increased by 128 million compared to Q3 FY24, mainly on account of Red Sea surcharge issues. Out of this, an amount of rupees 75 million is inventorized on the dispatches made to USA subsidiaries. Net debt. Our net debt was rupees 8,421 million as compared to rupees 7,671 million at the beginning of the year. The net debt has increased only by 750 million. Cash to cash cycle. Our cash to cash cycle was 161 days in the current quarter as compared to 132 days at the beginning of the year. New launches and Red Sea issues impacted both inventory days and overall CCC days. Cash flow from operations. Cash flow from operations for the quarter was healthy rupees 2,150 million as compared to rupees 1,794 million in Q4 FY23, and for the year was 4,394 million as compared to 7,387 million in FY23. Cash flow from operations for the year is decreased due to reduction in EBITDA and an increase in inventory days. CapEx. CapEx spent during the quarter was 1,006 million, primarily invested in Granules Life Science and Granules C0. During the year, we spent 3,823 million, primarily invested in Granules Life Science, amounting to rupees 1,560 million, and Granules C0, rupees 565 million. ROC for FY24 is 16.5% as compared to 21.2% in FY23. The decline is primarily on account of decrease in EBIT, investments in Granules Life Science and Granules C0, and increase in inventory days. With this, I open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Soni, an individual investor. Please go ahead.
This is regarding the new capacity you have built. So when do you think optimally it can be used, within this year or maybe next financial year?
Yeah, I think you're referring to the formulation capacity.
Yes.
Assuming it's that, I think from July the ramp up will happen. By August we should be touching about something like 100 million per month. And over the next 8 months from then, maybe into April, May of next fiscal, we should be able to touch at least 4 to 5 billion
Okay.
annualized capacity.
And regarding this new product approval, so how much it can contribute to our revenues going forward this year, next year?
Priyanka, you want to answer that?
Sure. Good morning, good evening, everybody. Going forward, we're looking for new products to contribute about 7 to 10% of everything goes well of next year's revenues.
Okay. And how is our progress on the DDCA, the green chemistry, what we were planning to do? So how is the progress right now looking like?
We started pilot plant production in March. We commercialized production from the pilot plant, and a lot of trials and variations are happening. We are also streamlining and tweaking the process. This process is first time in the world anybody has done it. It's our own proprietary patented technology. It needs a lot of refinement. So it's going on in the right direction. Everything is planned, and once it's finalized, we are already making arrangements for commercial production in Kakinada. So things are going well on that front.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. So just wanted to ask, right now, sir, we are, seeing improvement in our gross margins right now again. So what kind of margin trajectory would you see in FY25? Will we be able to, keep bettering margins as quarters go by?
Yeah. Thanks for this question, Javed. We have achieved 48% gross margin in F24 and F23, and F24 we have achieved 55%. Last 2 quarters we are in the range of 57 to 60%. That is also because of higher FD sales, and we continue to see that the higher FD sales will be there in the next year as well. And the raw material cost also has helped us in the current year. So depending on the raw material cost and our product mix, we see the sustainability in the range of 55 to 58%.
Oh, okay. So how much would that translate to as an EBITDA? So can we see around a broad range, maybe 24 to 26% EBITDA? Is that possible, sir? If you could help me in that, sir.
I would very conservatively say something around 22, 23 is possible. That's what we've been maintaining throughout, and we are trying for more, but let's see what happens.
Oh, okay. Perfect. And so with regards to our higher interest costs, so what would be the trajectory that you would see? Maybe this run rate would continue for a year or two, or how would we look at our higher interest costs, sir?
That would all depend on the US Fed, but I would let Mukesh answer that in detail.
Yes. Yeah. Thank you, CMD, for putting that rightly. So yes, it is largely dependent on our SOFR rate. If you see, our net debt has not gone up despite investments in capex. So it is largely dependent on Fed rate. And based on the current condition, we see the Fed rate is not going to come down in next 6 months also. So in the upcoming quarter, we see the similar interest cost of Q4. For next 2 quarters at least.
Okay. So that helps a lot. So and just one last question in terms of revenue, would we like to guide something that how much better could we do it in FY25? So any quantitative, qualitative guidance that can we grow at a certain rate? That would be very helpful, sir.
We'll definitely do better, Zaveri, and how much better I don't want to mention anything. Like I said before, we have taken a decision not to give any guidance.
Oh, okay, perfect, sir. And so just one last question, sir. In terms of our demand environment, do we see any, how is the demand environment currently going? Is it buoyant right now, or what do you see around? So
the demand for all our products is quite good. As we add new geographies, the sales are also increasing. and there is a fairly good demand, a very healthy demand for all our products. Except of course with the exception of paracetamol, where we have had some challenges in the last quarter.
Okay. That's it from my side. Thank you so much, sir.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Hi. So my first question is that paracetamol API sales have been declining and it's witnessing price erosion. So where do you see this stabilizing now?
This demand is also partly because of overstocking by some of the large brand leaders in the world, and that I think should start stabilizing from Q3. And also there's also an issue of excess capacity that was built up after COVID. So there is a lot of competition, and that is causing to price erosion. I think this year most of this thing may continue. Next year onwards, FY26 things should stabilize. But even during this year, quarter on quarter, I think there will be some improvement.
Understood. Thank you. And my second question is on our debt profile. Where do we see a comfortable net debt number, say, over the next 2 to 3 years?
So internally, we want to manage net debt to EBITDA at one level. 1.1, we are comfortable. Hope that answers your question.
Yes, sure. Thank you.
Thank you. Participants who would like to ask a question may press star and 1 at this time. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, this new formulation capacity that we have installed, how much revenue do we foresee from this plant itself in this fiscal and in the coming year?
The new capacity is in Granules
Life sciences.
Yeah. So CMD has already answered that 100 million per month we are expecting July 24 onwards, and next fiscal year we are looking at 4 to 5 billion.
All right.
The revenue would depend on the product mix. Also, they are trying to finalize which products to commercialize there. It will depend on that.
All right, got it. Got it. Thank you.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Yeah, thank you for the follow-up. So I just have one more question that we see that the product mix over the next 2 years, say it has changed from 25% new products, 25% legacy products. So when can we expect the shift in the margins due to this product mix?
Yeah. So as I already pointed out that we have a product mix change from API to finished product, and as CFO has already explained, we already moved up our margins because of the shift in the business model. All the new products which we are launching now, and we are going to get approvals in the next 1 to 2 years also will add to this shift in the business model more towards the FD. And also in other regions also we have the contributions coming from the finished dose. So overall, I think the movement will be quite positive on the finished dose side, and that should help us to have much better and sustainable margins of bottom line.
Got it. Thanks. All the best.
Thank you.
Thank you. The next question is from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening, sir. Hi, thank you so much for your time. My question was that if you look at our employee costs and other expenses this year, they've gone up by almost 20-25%. And I think some of it seems to be that, we are kind of investing ahead of the curve in new plants, and I think we've had the new packaging facility in Virginia as well. So is it the right understanding that in the coming couple of years, as revenue scales up, some of these cost line items should kind of grow lesser than revenues? Basically, is there like scope for operating leverage to kick in, given how the business is kind of positioned right now?
Yeah, Madhav, you have been perfectly right saying that the new facilities and expansions that have led to increase in manpower costs. It's R&D too, R&D, GPAC, the packaging facility in US, and also most importantly, we are investing in building a future-ready organization. In the US, not only the packaging side, there's been a lot of investment on the marketing team and also building up capacity in the US manufacturing. So both these things also have taken up a lot of manpower, and also we have invested a lot on the global marketing team. We have built up a new organization to serve customers in a better way, and we have people of very high caliber, and a lot of people have been added to various services. They have customer-specific representatives. There's a big change happening in the organization. This cost increase has happened, but going forward, it will not be at this rate, definitely. This is a big shift that has happened this year. So it will be in control.
Okay. Understood. And then the second question which I had was, I think in the presentation you have highlighted I think this is the second part of that slide, which is the portfolio expansion slide number 7. You have spoken about the CNS, ADHD products and the MUPS products. And I think you have also mentioned about getting approval for metoprolol and I think one other product which has come through. So just wanted to understand that some of these products, will they start contributing in a healthy way from Q1 FY25? Is that how we should think about it?
They will not contribute heavily from Q1, but as we go by, these are very big products for us. We are banking heavily on these products, and the margins and the revenues from these products are going to really propel the growth of Granules.
Okay. So could you share a bit more on the timeline? Like when do we expect more material ramp up from these newer products?
This year itself, FY25 will be a good contribution from these products and a big good growth due to these products. But 26 should be the year where we will see a very marked difference.
Okay. And I think Priyanka was referring to, I don't know if I picked it up.
Sorry, go ahead.
No, I was just saying that I think in the earlier comment, you had mentioned that 7 to 10% of contribution should come from new products in FY25. So did I get that right? 7 to 10% of FY24 revenue basically should be like new products in FY25. Is that right?
I think so. What we are looking at right now, when the question was asked, was on the 7 to 10% was the contribution coming from new products. But as we see the number of approvals and the launches that we are doing in the US, this percentage of the new products is definitely will go up, and it continues to grow as we go from FY25 to 26 and 27. This is expected to grow much larger.
I just want to add a clarification. In the presentation deck which we have circulated, it is a history of 10 years. So history of 10 years, if you see, the 5 products were the large and everything else was new product. What JMD has just clarified is, in addition to that, another 5-7% contribution from more new products.
Not the growth of new products introduced already, but the products that will be introduced.
Got it. And has metoprolol been launched in the US, or that is going to happen going ahead? And ibuprofen OTC as well?
Mostly US, but it's happening in other countries also. So nowadays, whatever the new filings we do, it's for across the world, global filing. So most probably we launch in US and Europe at the same time. Other countries will be in the next phase.
Okay, got it. And just the last question was our capex expectation for FY25?
FY25 capex, we are estimating about 6,600 crores. So half of that will be granulized and expansion. Other half will be for other projects as well as maintenance capex.
Okay, got it. Okay.
Just to elaborate a little bit on that matter,
yeah.
We have decided to go a little slow on C0, take a very cautious approach.
Yeah.
And only after each state gate is passed, we are investing money.
Which makes sense. Right. Okay. All right, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Forum Parekh from Sher Khan. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is, you mentioned that value-added products now contribute 65% of the sales. So, may I ask, what is the percentage contribution do we envisage? Till what percentage, do we want to go?
I'll just clarify, your question a little bit. The value added, we call it as gross margin as value added, which is 55% for the year. And if you're asking about formulation, quarter 4 we were 73%, overall year we were 65%.
So this 65% is expected to reach to what number? How much do we envisage?
We are looking at around 70% moving forward.
It could be a little more too, but we will see as we go by. We expect some API sales also to keep increasing. We don't want to cannibalize that totally.
Okay, so this 75 is expected in 1 year's time, or it will be spreaded over a period of 2 years?
Yeah, it will be next year, 1 year's time itself.
Okay. So then my second question is, you mentioned that EBITDA margin is expected to reach to 22-23%. So again, this would be over a period of 2 years, or we see this coming being executed next year?
If you see in the past few years also, we were around 21-23% EBITDA margin. So we expect that to be restored as early as this year possibly. But going forward, we say that this is what we will maintain, but the possibility of doing better is always there.
Okay. And sir, in the presentation I see on the slide 22, geographically all the geographies have not performed in FY24. So could you just elaborate? Why are we not able to grow in all the regions like Europe, Latin, India, ROW?
In these markets, Latin and ROW, especially these two markets, and in Europe, our sales were mostly propelled by paracetamol, API and PFI. So we had an issue on a paracetamol API PFI due to market demand coming down and also the price erosion. Just to give you an example, the prices have come down from something like 600, 650 rupees to 250 rupees or 300 rupees. It's as low as that. So that is what has contributed to the decline in sales in this region.
Okay, so sir,
FDs have gone up in Europe. They've compensated to some extent.
Okay. But sir, in ibuprofen, we see that prices have come down and probably we do not see it going back to the COVID days. So how do you see the demand? Is there demand, and with this kind of prices, how do you see ibuprofen sales ramping up in the next years?
Ibuprofen sales will have to ramp up only by volume increase. It is not going to be driven by value. I think the value is at its lowest and it will continue for a while. The market for these products like paracetamol and ibuprofen don't grow too much. They grow by single digits or possibly 2 digits. And the only way we have been growing is to increase our market share. And very crudely put it, cannibalize on other people's market share. We have done it successfully in the past, and even for ibuprofen going forward, we expect to improve our market share, mainly in the US. But the good news is we have some European approval, and we already have tied up some sales contracts with some customers there. So ibuprofen will only grow by cannibalizing on others.
Okay. And sir, can you just give us the number? What would be the market share for ibuprofen in the European market?
There are different forms, OTC, RX and all. It's a little difficult to estimate. But we do not have a presence today, but we will be getting a decent market share as we go forward in Europe.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of KVKS Chaudhary, an individual investor. Please go ahead.
Good evening, sir. My first question is with regard to MUPS block. Can you give us an idea about the current capacity utilization in the product from that line?
MuxBlock is contributing quite well to the whole revenue and profitability. But actually, MuxBlock we also do a little bit of granulation and other tablet compression too, and we have packaging lines. But actually, going to just the Mux products, we are doing around 40 to 50% capacity utilization, and by the end of this year, we expect it will go up to 70%.
Yeah, my second question is with regard to Granules Incorporated, GI Incorporated. We have had some controlled substances approvals and as well as ADHD, but the ramp up doesn't seem to be commensurate with the number of approvals. What is the current investment and asset turnover EBITDA in Granules?
Can you come back on that question?
Asset turnover, let's talk about asset turnover for GPI to start with.
GPI asset turnover, we have invested there in the intangible assets as well as fixed assets. Fixed assets turnover is significantly better. So it is in excess of 5. And now GPI manufactured products is also growing up. Some of the launches, as you rightly said, which will get launched in next couple of years. So we will get a good turn on the intangible assets also.
The controlled substances are not under patent. Isn't it possible for you to launch them immediately?
We have a lot of controlled substances being sold from GPI, from our US facility already. And that facility has been set up only to concentrate on these products. And we have more products coming up, and we'll be selling more of these products.
Okay, what's your ADHD line?
Sorry?
What are the products lined up in for ADHD?
We have many products lined up, but I don't think we should talk about names.
Hello?
Yeah, we can, Mr. Chaudhary. I don't think we can give you the names of products.
Okay, thank you so much.
Yeah.
That's it from my side.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Participants are requested to press star and 1 to ask a question. The next question is from the line of Neeraj Prasad from Motilal Oswal. Please go ahead.
Hello, am I audible?
Yes, you are, Neeraj.
Hi, sir, Tushar here. Hello, Tushar here, sir.
Hi, Tushar.
Hi, sir. Sir, on metoprolol and subsequent to that, how do we see, a good any potential product for 25, 26, if you could, throw some light?
It's got, go ahead, man. Anything else?
Yeah, maybe if you could answer this and then I'll take this.
Tushar, metoprolol has a very good potential and things are looking very, very positive. And we are ramping up production for the US market. So we are very happy with the progress there. And the good news is Europe also, we got approval. We are going for national phase. And this year, we will start sales of metoprolol in Europe also. So 2 regions we will be selling, and we are also planning to take this product into LATAM and other countries. The outlook looks quite good.
Sir, anything on the price erosion on metoprolol per se with in terms of the competition?
Not a great price erosion. There's normally whenever a newcomer comes, there will be a fight, so prices will go down a bit, but it's nothing drastic.
Okay. And sir, any other like this interesting product in the portfolio which can come up for approval in 25?
Yeah, they're quite an interesting product, Tushar, and as we get the approvals, you will know about them. And maybe later on, possibly we could look at how they're doing. But yeah, many exciting products are in the pipeline.
Understood.
Just to add to that, we have a total of about 16 to 18 launches coming up this fiscal year. out of which 14 products will be new and remaining will be essentially extensions of the launches, ramp-ups of the launches that we've already made in Q4.
14 new launches, right? If I heard correctly.
Yeah.
Interesting. So that should further build up, at least as far as the US market is concerned.
It's not just the US market. It's both, US and rest of the world markets.
And mainly Europe, Tushar.
Yeah.
Okay, so this 16 to 18 launches is combining of US and Europe market largely.
Yeah,
correct.
That's right. It's a big challenge for us and exciting period. This is the first time in Granules we'll be launching so many products in 1 year.
Yeah, that should help grow the sales at a healthy level in 25-26, right?
Yeah, that was definitely, Tushar, you're right. We all working towards that.
And so if I connect this comment with the EBITDA margin also moving up to 22-23% for FY25. So effectively and subsequently the cash flow generation and considering the capex, the net debt level to what it will come down to maybe by end of FY25.
Net debt will not possibly may not come down, Tushar. The only thing is we are looking at maintaining our net debt EBITDA at less than 1. And if at all we can get great opportunities too, we may not want to grow if the net debt EBITDA is going more than 1. But we are not trying to make it zero debt, bring it down totally. We want to have a healthy net debt EBITDA.
Understood. So, I didn't mean zero net debt, but will there be any reduction in net debt? 50, 100 CR maybe?
Not expected, Tushar. We are not at 1,500 CR. We are 840 crores CR. So, net debt to EBITDA. Sorry?
No, I meant 15 to 100 CR reduction is what can be expected.
Not really so, because with the growth there will be investment in working capital and also granule license capacity extensions are planned. So we would positively manage the net debt to EBITDA ratios not worsening, it is improving.
Just to clarify, Tushar, 842 is the net debt as of today, as of year end. And I don't think we are not planning to bring it down drastically. Maybe there could be a small change plus or minus here and there.
Got it. And lastly, because I joined late, so I would have missed. So, just if you could elaborate on the paracetamol situation, what has happened exactly because of which there has been significant price reduction? Is there any new competition that has come up, or existing players have lowered the prices significantly?
So, Tushar, there are three components to this issue. The first one is many players who are end customers of paracetamol have actually got a lot of inventory stored, and as explained by Chairman earlier, it will take a couple of quarters to actually get to the position of liquidating their inventories, and therefore the paracetamol situation is expected to not to go back to the original levels, but definitely go back to some higher levels by Q3 or Q4 of this year. That is the first reason. The second reason, because the offtake is low and the capacities which have come up thanks to COVID are high, so there is an excess supply to the demand, and some of the organizations are looking at lowering the prices to actually survive the capacity utilization. So therefore the price has been significantly down. In fact, the number thrown by Chairman just a few minutes ago. So I think that's the second. And the third one, we actually did, as I told my communication, that we are moving towards the finished dose of paracetamol, and therefore we will be in a position to look at overall balancing act of paracetamol in the next couple of quarters. But suffice it to say that the situation will continue for next 2-3 quarters.
Just want to clarify, Tushar, except us at Granules India, every other paracetamol manufacturer is a single product company. And they will fight tooth and nail. And if they don't sell enough, they'll be dead. So they are desperate, and at this point in time, I don't think we should go and fight for that market with no margin. We would stick to our regular customers, and once their inventories are rationalized, we would get back into business.
Got you, sir. And this is more specific to paracetamol, right? We are not seeing such situation in either of metformin or ibu or metoprolol, right?
No. It's only paracetamol.
Understood. Thanks a lot, sir. That's it from my side.
Thank you. The next question is from the line of Harith Ahmed from Avendus Spark. Please go ahead.
Hi. Good evening. Thanks for the opportunity. Sir, can you disclose the sales from our GPI subsidiary for FY24, Granules Pharmaceuticals Inc., or US subsidiary?
Did you say revenue, Harith? Dr. Harith?
Yeah.
Okay, yes. So GPI full year turnover is 1,619 crores, Harith.
Okay.
And for the quarter is 477 crores.
Okay. So when I look at FY24, we've had a very strong growth in our FD segment, more than 25%. So when I think of FY25, should we extrapolate a similar growth? Will we be able to maintain a similar momentum for the segment? And if you can also share the number of launches that you're targeting in particularly in the US.
Harith, all the growth going forward is only going to come mainly coming from FD. So if you look at the overall growth, obviously the FD growth has to be very decent, very healthy. Definitely there will be a very healthy growth and possibly little better than last year's growth.
Okay. So when I look at the filings data that you've given in one of the slides, we have from both GPI and GIL together we have around 13 NDAs pending approval. For the size of our FD business in the US, this appears to be slightly on the lower side. So should we expect a further step up in R&D spends going forward? And if you can share the spends that you're anticipating in FY25, R&D spends that you're anticipating.
So we have already communicated that our R&D spend has gone up, and it continues to remain around that and slightly go up the coming years because we have a very good pipeline and the delivery of the pipeline in the various categories, as I mentioned before. So we expect the R&D spend to be, first to first.
Yeah.
So, go ahead.
Harith, Dr. Amrao said in the speech that we are working on a lot of first to file 181 days and all these P4 launches. So there's a lot of work going on, especially in the onco and other areas. So there could be a slight increase, but overall I don't anticipate there will be a great increase in R&D spend. Already we have provided for the growth and we are already there.
Okay, got it, sir. And last one, when I look at other expenses for the quarter, there's been a sharp increase of around 50 crores quarter on quarter. I understand some of that is probably because of the quarter-on-quarter increase in the R&D spend, but it still seems to be on the higher side. Any one-off that's there in the number, the other expenses number?
Yeah, Dr. Harith, as we have explained, one is the R&D expenditure which has gone up. Second is the freight cost which also has gone up because of Red Sea issues. In addition to that, there are a few one-off costs, consultancy cost and quality audit costs which also have gone up, which was specific to quarter four.
Okay, so we should expect some normalization when we think of the coming quarters.
Yeah, so this going forward, R&D, there will be a similar expenditure quarter onwards. Other expenditure should come down.
Understood, sir. Thanks a lot.
Thank you. Ladies and gentlemen, in the interest of time, this was our last question. I would now like to hand the conference over to Mr. Krishna Prasad for closing remarks.
Ladies and gentlemen, once again, thank you very much for attending our call in spite of your very busy schedule today, this being the earnings season. So once again, thank you very much, and look forward to meeting you all in the next investor call with better news.
On behalf of Granules India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.